Deal Surgeons Elite Masterminds. What's going on? This is Diamond Life. So just doing a review of a win on using the ICT swing trade model. Okay, so let me explain what it is first. And so, like I said, these are all my folders. I believe I have a Google Drive with all the ICT stuff in there, or whoever you follow. So I have all my stuff organized. So now I can go to the swing high and swing low structure. So I have the screenshots in here. So I want to explain the screenshots, and then I want to go into the chart and actually show you what it is. So this is pretty cool. I've been knowing about this for about a year or so. I've seen it in the charts, but I never actually seriously traded. I just kind of was like, okay, well, this works, you know. Um, but I never actually really used it, but it's pretty powerful. So the way it works is we look for a swing low. So we have like a pitchfork model. So we have this is candle one, candle two, candle three. So we're looking for candle three high to be broken, okay, when we're on a swing low. So this is candle one, two, three. You see how it has it's like a triangle or upside down pyramid. See that? So we're looking for this high right here to be broken. Once the high is broken, we're on alert. So I call this the trigger right here. And then the way it works is, I'm not going to say guaranteed, but I would say, 90% of the time you could take a buy to this high. So when this candle open right here, basically it went down, and then you could have got in on a buy limit down here, and then you could have got out at this high. Okay, so let me show you another example. So these screenshots here is from me actually screenshotting ICT's videos on my phone and actually taking notes right then and there. So here's the daily chart right here. Um, okay, so where is it? Okay, so we have a swing low right here as well. We got a swing low right here, candle one, candle two, candle three. So we're looking for this high to be broken. This high is broken right here, so we could get in. So we're basically guaranteed damn near for the liquidity above this candle here. This is just a quick scalp, okay? So you could have got in here at 50% of this candle and took a buy to here. Also, we had this wick right here. If you understand ICT structure, you could have got out at 50%, or you could have broke this candle up into four different areas: 25%, 50%, 75%, and then of course the wick high. And then I'll show you one more example, and then I'll go to the actual chart itself. Okay, uh, so here we have it again down here. This is a swing low, candle one, candle two, candle three. So we're looking for candle three's high to be broken. It was broken. So based on this theory, we could take a buy. Even sometimes you'll see in this example, especially with AUD CAD, price actually came all the way down here and broke both of these candles lows and then did this huge push here. So, I would say you probably need to put a buy limit down here below this wick right here of day three of this third candle. All right, so let's go to the chart itself and take a look at AUD CAD. It was a lot of fun. Uh, it actually made me mad because I hate when I study the structure and I depend on it and then it don't do what I think it's going to do, but it worked out. So let me show you. Okay, so all right, so this is the daily chart here. AUD CAD. What's AUD CAD? Okay, so all right, so why do I have alerts on here? Okay, so this is AUD CAD. So what happened is I caught it when it was here. This is a swing low. So you got candle one, candle two, candle three. Okay, so what I did was I put a trigger right here. So if this high was broken right here, then um, I know I could take a buy up to this area here. Okay, so this is the swing low, candle one, candle two, candle three. If this once this high is taken, we got to let this candle finish closing. The way it works is we can take a buy, guaranteed, damn near up into the high of this candle. Okay, so that's what I did. I went ahead and yeah, I got in. I let this candle close. So this is a daily candle. And then what happened is once price opened up here, I put a buy limit in for 50% of this body candle, and then I put a buy limit down here, and I got in at a short position right at the open. So it was going down, and I thought it would probably stop right here, but it just kept going down. Also, we had a bullish order block right here. If you imagine an imaginary line extended out, that's another reason why I had a buy limit down here, because it kind of makes sense because it probably was going to come down to the bullish order block before it goes higher. Also, I had a buy limit down here at mean threshold of this order block, and I had a buy limit down here because I was thinking, sometimes it'll do a rejection block. It'll come all the way down here below this candle and then reverse. So I got in at the open on a small position. I think it was like a 0.10. And then when it came down to this order block, I went heavier. I put 2 lots on. And I missed this area here because it didn't come down to mean threshold. And this price was going up. I just got in chasing price on another lot. So I had 2 lots. I had 3 lots in. And the targets were, I always target like the opening price. The closing price of this candle here. And then I broke this whole wick up into 25% standard deviations right here. So let me show you what I mean. So this wick right here, I broke it up into standard deviations of 25%. So if I put the Fibonacci on here, so this is 75%, 50%, 25%, and then of course the wick high. Okay. Also, if we look to the left, we also had this wick right here. So what I did was I also broke this wick up into 25% standard deviations. So I'll put the fib on here. So I put the fib on here, and because a lot of times it'll just keep going higher, so we don't want to miss all of that. So I think I got a notification on where I actually got out at. Hold on, price is dropping. Oh no, hold on. So I got out in these standard deviations right here. So as price went above this wick, this was my terminus, of course. I thought this is the terminus, but we had a standard deviation up here at 50%. So I got out at 50%. This price just kept going up. I got out at 25%, which was around here. And then I was aiming for the wick high up here. And once it took this wick high, I just sold everything because it could have easily reversed even going up a little higher. So yeah, this is a swing high, swing low ICT. I think I'm just going to incorporate this a lot because it's something that if you can see the structure clearly, then it won't fail. A lot of times you'll see that this high right here won't be taken unless the structure is bullish. So a lot of times, if it's not bullish like a candle, it'll come all the way up here with the wick, and then you'll see a lot of downward movement. But you can't really do anything until this high is taken. So it's good to look for it on a daily chart because you can pick up more points. All right, thanks for watching.